What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at NIO Stock, ticker symbol NIO, on a variety of time frames in anticipation of the next trading day, Monday, February 26th. Well, NIO Stock here on Friday finished the day down about 45 cents a share, 7.69%. This has been a volatile name lately, so keeping an eye on this one here. Let's take a look at this one. Let's get contextual about levels to watch moving forward from a bullish and I suppose also a bearish perspective. And also what I want to do is take a look at any bias that we can pull out of the data that we saw here from Friday's trading day. So taking a first looks here, the stock is down 2 cents after hours, about a third of 1%. Keep in mind, guys, as always, with after hours movement, see that there? Volume is so low that you have to take it with a grain of salt. I don't care if it's in your favor. I don't care if it's going against you. Take after hours with a grain of salt. It's very easy to push around. So let's jump in here from a day-to-day perspective. We'll start here with the 5-minute chart. First of all, hey, if you guys appreciate me making these videos every single day, if you get value out of these, please subscribe to the channel. I have a goal. I'd like to hit 2,000 in the next 7 days by around this time next week. And but that's only going to happen with your guys' help. So I appreciate it. And let's take a look here. The 5-minute chart, you guys know, I'm always looking for correlation, right, with big spikes or dumps in volume. And I want that to correlate with a particular side of a move in stock price. That tells us if a big sample size of the market agrees with one move or one sentiment more so or the other. Like, for example, if you have two equal moves and they look as if they're equal aggressiveness, down and up or up and down, they're not both created equal if volume on one of them is much, much higher than on the opposite. Okay, so for example, I'm looking, okay, we see this big sell-off in the morning here, off of the open on Friday. And that was on relatively large volume, but you have to understand that on the open, we expect larger volume. That second candle actually saw pretty substantial volume, but we had a pretty large bottoming wick on that candle, which tells me that, I mean, listen, a lot of this 7.5 million shares in that 5-minute candle was probably hitting the offer. It was probably buying volume. So I'm keeping that in mind while looking at that. Honestly, throughout the rest of the day, the volume was kind of underwhelming. You know, I mean, we did see a spike here in selling in volume on a red candle, but again, I mean, we had a pretty large bottoming wick, so I think that was a lot of buyers contributing to that larger volume candle. Now, granted, we did see a little bit of heavier selling volume into the close here, but again, it's not out of the ordinary, of course, to see increased volume into the close. But bulls, just understand, you know, you are going to see some bears taking a look at that and saying, okay, you know, that's good to see into the close. So just understand that as a bull. Now let's move on here to the 30-minute chart and start looking at levels to watch with the ever so popular self-fulfilling prophecy psychological levels of the 50 period, that white line, and the 200 period moving averages. These are levels that everyone is going to be watching on a very popular chart here, starting with the 30-minute. Now, from a bullish perspective, okay, we're currently about 4.5% away from that 50 period. That is within range. Okay, we've seen NIO be very volatile as of late. So, I mean, really, from a bullish perspective, I would like to see us reclaim the 50 period come Monday. Reclaim it, treat it as support once again. Bears, you're going to want to see a continuation downside of the 50 period to continue to add psychological pressure downside, to maybe add a psychological barrier to keep pushing that thing downside. All right, bears, that's what you're going to be looking for. And bulls, just understand that. Understand the psychology of the enemy, so to speak. Now, let's move on here to the 4-hour chart and take a look. You can see that that white line is the 50 period. That is the most, I would say the closest and the most in play here on the 4-hour. You can see that the stock is currently about 10.65% away from that 50 period. So let's start with a bearish perspective here. Give the bears their day in the sun here. Bears, you're going to want to see that 50 period on the 4-hour continue. You can see it's just starting to curl downside based on today's volume. You're going to want to see that continue to curl downside. Similar to on the 30-minute, it stays below $6 a share, a psychological level, and helps to continue to add a lower, like as the level comes lower, a psychological barrier putting pressure on the stock. Bulls, all right, ideally Gonna want to see the stock make a move up toward, because really the ultimate goal is to reclaim that on the 4 hours so that we can try to get a bounce off of that level and push us higher back up toward that 200 period. But it is 10.65% away. So on the 4 hour chart, bears, it's a volatile name, but really looking just for a bounce up toward that 50 period. It would be great to see that reclaimed in 1 day, but making progress up toward that level ideally, not really seeing it curl over too hard. All right, now let's move on here and take a look at the most important chart of all, which is the daily. Okay, you can see here, we do have earnings coming up on NIO here on March 5th before the market opens. But as always with the daily chart, now why is it the most important, right? Well, because it has the most eyeballs, almost always. Institutions, funds, all retail investors, retail traders. I mean, even algorithms are heavily considering levels on the daily. When you have the most eyeballs, it really turns into that self-fulfilling prophecy concept I'm always talking about. So looking here at the daily, we can tell. Look, the 50-day is not really immediately relevant, okay? What's the story then here? Well, it relies heavily on what you can obviously see, even without a lot of training in looking at charts or a lot of experience or a lot of TA knowledge. The story here for me is relatively obvious, and it's a combination of a few things. First of all, as a bull, I don't want to see a downside break of that recent low of 530. So I'm watching 530 very closely. Okay, the stock is in the 530s after hours right now. It's closed at 540. Now, as a bear, that's kind of like the goal, is to break downside through 530, head down toward 5 for really, because the big goal as a bear is to get down below $5 a share. But bulls, pull away from 530, if not bounce off that level as soon as possible. Get back above 550, reclaim 550, reclaim the $0.50, treat it as a support level, and use that to work our way back up towards 6, because a reclaim of 6 is really the ultimate goal here in the near term as a bull. Now, implied volatility here on NIO is currently sitting a little bit higher. Just understand that the higher that goes, the more the potential risk of IV crush for those who own purchased options. And the lower IV goes, typically the options traders are pricing in that they're seeing the stock as more stable at the current levels. The lower IV goes. And also the lower that goes, typically the more favorable the conditions are for new purchasers of options. Okay, the sellers always want that IV to be as high as possible when they're selling. Okay, let's take a look now at the bias, right? The bias in the chain, because this is real. This is data that we can look at from just Friday here. 241,000 total contracts traded. We can't ask for millions on NIO. Okay, so that's a pretty good sample size. We always want as much as possible for the best data we can possibly get. 157,000 of those were calls. 84,000 of those were puts, so we are seeing a pretty heavy call bias here on NIO today on Friday. And the short-term speculators, that 0 to 20 delta range, 52,700 calls, 27,300 puts. So not only are we seeing a heavy overall call-put ratio to the call side, we're also seeing a pretty heavy call bias on the short-term speculator delta range, right, of 0 to 20. Okay, now we work our way down. 21 to 40, also call heavy. 41 to 60, those are those at the money contracts, more the midterm sentiment, right? 47,000 calls, 25,000 puts. Now, as we get in the money, right, the more expensive, longer term sentiment contracts, it starts to actually lean just barely to the put side, 61 to 80 delta range. And then the really deep in the money contracts are leaning about twice as many puts compared to calls here from Friday. But always understand, right, as volume gets lower and lower, which it typically does at the higher delta ranges, the more in-the-money contracts, right, because they're more expensive. So naturally the volume falls. But as volume gets lower, we have to take it with more and more of a grain of salt, because one big trader can kind of throw that off. But in the short term, the 0 to 20, that short-term delta range of 0 to 20, pretty heavy call bias. Overall call per ratio, pretty heavy call bias. As always, listen, the options traders can of course be wrong. Number one around here, make sure your risk is always managed. If you got value out of this video, please subscribe to the channel. I appreciate you, and I'll see you in the next one.